Welcome to TheoTrade. This is Don Kaufman. It's October 9th, 2024. Just about an hour to go to the cash close here on this Wednesday afternoon. The Fed minutes are out. Yeah, that really didn't have much of an impact to the marketplace today at all. But I got to tell you, what you got to look at right now, it's not even where the S&Ps are trading. Look, it's CPI. It's about to rock this marketplace. And speaking of this marketplace, you got yourself a bit of a conundrum here, and that is an incredibly tight range, but with high volatility. Let me explain what we're likely to see in the next day or two of trade, because look, things are about to get very, very interesting. First and foremost, look, S&Ps right now are up some 31 handles. Not really of any concern to me at all. And you're like, well, why? I mean, come on, they're up 31 handles. What am I missing over here? The fact that there's absolutely no volume. It is light out there, people. It kind of feels like no one wants to step in front of any catalyst right now. And the catalyst comes tomorrow morning. And quite frankly, the CPI print, I'm not expecting anything huge. And the overall risk implied to it, it's not nearly as massive as it was in past CPIs. But look, you're still looking at about a 45-point move. And I'll come back to that. That's the expected move. The aspect, though, that lends itself to kind of a high-risk situation, and I want to make that very clear. There's a very high-risk situation in this marketplace that I'm going to elaborate upon. Let's go into the S&Ps for just a second. These are the S&P futures, and I'm going to go to the 30-day 1 hour. And when I was talking a moment ago about kind of a tight range, and I'm just going to kind of highlight the range that I'm referencing in this case, and it's right, obviously, in this neighborhood here. Now, quite frankly, right here, right now, we're right to the upper edge of that range. But this is a range we kind of jumped into it in kind of mid-September. And here we are, kind of second week in October. And for the most part, you're in the exact same range, the better part of 3 weeks. And it is a tight range. I mean, most of the trade has persisted from 5,800 down to roughly about 5,740. And again, I'm elaborating upon the range because as I was talking about in this weekend's update, all we're doing is just accumulating more and more and more and more open interest. And we're coming to a crescendo. Now we're at the high end of that range right now. In fact, we even popped outside of it a little bit today. Again, you're looking at this 30-day 1 hour. So we kind of popped the upper edge of this range today, which puts us in kind of a precarious place. But with CPI tomorrow morning, I just push it aside. Look, I cannot stress to people enough when I was saying it's a fairly tight range, but the volatility, even if you look at VIX right now, right, is basically in the 20, 21 range, but we're not moving. And the longer you sit in a situation to where you're like, oh, the S&Ps are not moving, but volatility is up there. And it's not just VIX. We're still in a fairly wild kind of backwardation here, right? And I'll even go further out in time. If you look at the November volatility futures, and I'm going 42 days out, you look at the no volatility futures, they're still trading in the neighborhood of 1938. You go a little further out in time over here, the Decembers are trading obviously at 19. Yeah, there's an election obviously packed in there. But nevertheless, even the volatility futures that only have 7 days left to live are trading closer to 21. So we're still in this kind of wild backwardation of volatility, which for those of you that don't speak, volatility backwardation geek-isms like I do, the volatility backwardation just basically promotes the idea that risk is here right now. It's right in front of us. Now I'm going to throw something out there that you may not like this, but I'm going to throw it out there anyway. This marketplace can't see 2 feet in front of itself. What does that mean? Meaning that we're moving right now at a pretty good volatility level, but we have no clarity. This is like driving 80 miles an hour down the freeway, looking through the rear view mirror. Markets right now are, they are truly confused Okay, where do I see degrees of confusion? Obviously the range, the tight range in here, but volatility is relatively high. So that signifies, holy crap, something's coming. Volatility is relatively high, but we're in a tight range. We're all wound up. But there's other aspects that really, really resonate with me that, just to give you for example, I'm going to come over here, go to the CME group, and this is the FedWatch tool. Now, what the FedWatch tool does is it gives you, okay, probabilities based, okay, on definitive markets. It's not a probability with somebody like voting, right? So they're probabilities based on very definitive markets. And what the probabilities say right now, and this is important because I want to show you how little clarity there is in this market. Like I have to embody that idea by displaying this. This is where Fed fund futures are currently sitting, like 475, 500. Right now, there's an 81% chance, okay, of the next meeting a quarter point cut. Now, time out. I don't care if there's a quarter point cut. That's not the point that I'm trying to make. There's almost a 20% chance, okay, of no cut. That's not my point. My point is you're about a week removed from the idea that there was almost a 50-50 chance a week ago of a 50 basis point cut versus a 25 basis point cut. There was zero chance, okay? Literally 1 week ago, there was zero chance of keeping the rates flat. The point that I'm trying to make with this is not to tell you like, oh, we're cutting rates, we're not cutting rates. One of the largest markets in the entire world are revolving around those Fed fund futures. And the marketplace can't handicap it. It can't see it. As I said, within 2 days, those probabilities have completely changed, which should change your perspective on this marketplace. Okay. Meanwhile, the exact same time I'm saying that, you realize stuff like the dollar, it's absolutely exploding to the upside, right? This looks like it's very defensive in nature. And speaking of defensive in nature, I want to show you something else. Okay. And this is alarming. So we know that volatility is elevated to some degree. And we know markets are basically sitting at all-time highs. I mean, they are. Like, look, I'm not, but they're all-time highs, but we're just at the upper edge of that range. Got it. One of the things that you got to look at is if you start looking at year-to-date basis, like here's the spiders. The spiders are up basically 22% in year-to-date basis. If you look at the QQQ, they're up basically 22% in year-to-date basis. Start looking around, though, at individual stocks. Where's Microsoft? It's only up 12%. So Microsoft is not on the leading edge of anything. Where's Apple? Apple's basically even with the marketplace. Yay. Where's Amazon? Oh, it's up 23%. It's not doing anything. Okay, where's Google? Google right now is up 16%. It's the lagging edge of it. Okay, where's Tesla? Tesla's actually down on the year. Where's Nvidia? 174%. And Meta, okay, up 70%. So when we start talking about like the monsters of tech, they're the drivers of the marketplace. All you really have on the leading edge of the marketplace is Meta and Nvidia. Everything else is just fodder at that point. In fact, if you make the argument, but Microsoft's up 12%. That's on the lagging edge of what the S&Ps are doing. It's on the lagging edge of what the NASDAQ is doing. And I want to make that point. The other point I want to make? Why don't you look at some defensive sectors? What's defensive? This will actually terrify people. If you're not familiar with the XLU, utilities have been on an absolute tear. You realize they're up 22%. So you could have invested in utilities, and right now you're basically, outperforming, Google and performing like basically the same as like, Apple and Microsoft. But here's something even crazier. Let's go take a look at like Walmart, which is up 50%. Right? Walmart's actually trading like a tech stock happens to be right now. You look at Costco, okay, it's up some 40%. So we're looking at areas that are predominantly thought of as defensive. I looked at utilities, right? So I looked at a little bit utilities, okay? And then I'm going to look obviously at Costco, which maybe not defensive, but okay. And then of course we're looking over at like Walmart, but here's the really wild stuff. What do you think of as defensive? You realize smoking stocks like Ultra are even up 20%. This is extremely defensive stuff, okay? Philip Morris right now is up 25%, outperforming the S&Ps. Extremely defensive stuff. That's why I'm going to tell you right now, look, coming out of this range, okay, it's not going to be easy. It's not going to be pleasant. If you really want my, definitive feeling, I think we actually have to see more up, okay, before we actually come down and come down hard. And that kind of remains a little bit of my logic in here. Now, that portion is the opinion part of this. I just told you, definitively, volatility is elevated. Volatility, you need to be worried. VVIX today, or VVIX, the volatility index is actually up. Okay, does it make sense? Volatility is up, the marketplace up. Oh, there's an election coming. Of course, there's an election coming. Everybody knows that. But the risk that we're seeing is right in front of us. Like, this is not like election related. Like, there's just a high impact risk over here. You've got defensive sectors that are rallying. Those are all definitive things. Okay, the non-definitive nature of this is I think you have to explode a little bit more to the upside. Okay, we may come down very hard off this. There's got to be a reason that we're seeing not just elevated volatility, okay, but again, defensive moves in nature. So a lot to think about between even today and tomorrow morning CPI. The last thing I'll leave you with on this evening's video is right here inside of the SPX. Say what you will, but the marketplace hasn't done really squat this week, all right? So we had some sell-side activity on Monday. Obviously, on Tuesday, we rallied back. Where do we rally back to? Massively unchanged. So we're massively unchanged by Tuesday. Here we are on Wednesday. We're like, we've picked our head up. Look, people, we're like 30 points north of where we started the week. So let's not get crazy. In fact, even like last night was like laughable. We literally ended last night on where we started the week. So today we're exactly 29 points ahead of where we started the week. Why am I making this comment? I'll tell you exactly why. Because you still have $106, okay, of expected move this week. So the final thing I'll leave you with is, and this will be eye-opening. You did not hit the expected move, okay, last week. You did not, I mean, this is close, but you did not hit the expected move the week prior. Here, there's $106 of expected move. And quite frankly, we've done squat. Let's get ready to rumble, because here we go. So CPI is not necessarily promoting, this dramatic move. It's only promoting right now about a $45, move. Okay, I'm going to tell you right now, and this is a rare thing, I'm definitely taking the over on that one. Look for big movement into the end of this week, and I'm going to tell you, it's binary, but do not forget that volatility is elevated, right? Volatility is elevated. We're very defensive in nature right now. Keep your helmet on, people. Things are going to get interesting in a hurry. Thanks, everybody, for joining us here at TheoTrade. Have a wonderful evening. Bye-bye.